Yo, I want to kind of give my advice for upcoming week. Um, so I already marked this all out on NQ. So on NQ last week, previous week, we swept all-time highs here. We had some displacement to the downside. I react off equilibrium perfectly. Then we had displacement to the upside again, inversing this singular Vega gap. I think it was on the in this price lag. It's actually a 12-hour one, and we inversed this. We went higher, went above all-time highs again. I marked this out all on when was it, Saturday? But basically what we had was previous week was our accumulation week. So if you get Forex Factory, then previous week was here. Let's remove this. So this was our accumulation week. Monday we had some high impact news. Thursday we had some high impact news, but Wednesday no news, Tuesday no news, Friday no news. So that was my accumulation week. And then upcoming week I'm expecting like a manipulation week. So I'm expecting a lot of bullishness this week. Let's remove actually the GBP ones. So here. So Tuesday, Thursday, and Friday are really good weeks to trade in. And I'm kinda expecting this to be the manipulation week. We already did have some manipulation. So Friday, previous week, got this accumulation here. We had like a second week of reaccumulation, or a second week, just a second reaccumulation here. So I'm expecting like another reaccumulation in this -2, -2.5 standard deviation. Doesn't mean we have to react off of here, but I'll expect like a reaccumulation here. We could go even higher, and then the week after, so not this upcoming week, but the week after that, I'm expecting some distribution to the downside. We also have FOMC, PMI, not really special, but FOMC. We do have a President's Day there, and then day after, or the week after, we have some more high impact news. More high impact news after that. Basically what I'm expecting for upcoming week is I expect a lot of bullishness, or a lot of bullish prices. So we have CPI as well, so it could be a really big pump to the upside. I don't really see us actually retracing this week. I'm just really seeing this week as like making more all-time highs, or that's what I'm expecting. Yeah, that's really Monday, no trading because we have no news. So probably expect Monday to be like accumulation, of course, accumulation day. Tuesday we have like a again manipulation, so more manipulation to the upside. Wednesday reaccumulation, more manipulation to the upside, so expansion, and this expansion as well. Don't really expect the reversals still, because this is the original consolidation or original accumulation, reaccumulation. And then this is my drawn liquidity for not upcoming week, but the week after that. So I want to see us build, really build liquidity. Some more equal lows. We have created like a lot of equal lows here, low resistance liquidity here, low resistance liquidity here. And I'll sell side, and then I like a small, like here as well. I'm only 4 hour, but like a lot of equal lows. Previous week was just a lot of accumulation. We're just building up a lot of liquidity, low resistance liquidity. But yeah, so could have like a standard deviation off of this -2, -2.5, but I'm not really expecting it. I'm just expecting big bump to the upside. Like we're just gonna go even more to the upside. That's what I'm expecting. This is new territory, of course. So don't know for certain, don't know for sure, but it's kind of what I'm expecting, and that's really the bias. So for ES, I have this as well. So we could just remove this. So ES, we also took all-time highs. And I have this marked out, so of -2, -2.5 standard deviation, -2, -2.5 standard deviation. And it's all of this daily breaker. Or is it? It's actually an 18-hour breaker. So we have a low, high, lower, low, higher, high. Then we have the A to B lag. That's we have a standard deviation from there. That -1 standard deviation came in line with like the constant encroachment of the 12-month rejection block. And then we have like the BTC lag standard deviation, and this kind of just comes in line with like above the liquidity here, and we tapped this perfectly. So as you can see, it's -1 standard deviation. We tapped or we closed the previous week perfectly on that, so that could be like a really good target for us to go to. Doesn't mean we have to reverse off here, but this could be like a draw on liquidity on bigger time frame, because we're at new time high or at all-time highs. We're at new territory, so we gotta work with like the standard deviations. We don't really have anything else, so that's what I'm expecting. And what I just said, I haven't looked at DXY, but what I just said was previous weeks was our accumulation, and this week's gonna be our manipulation, and then the week after we're gonna see like some distribution. We could see like upcoming week, we could see like more. We could already start with the distribution phase, like maybe like the Friday. That's PPI. That's not really that high impact, but it could be like Friday, or it could already be our distribution or like our retracement. But DXY has got to match that really, like with the NQ and ES. So DXY is gonna be it's gonna be a lot like pretty bearish for now. And then later we gotta be pretty bullish. So we actually gotta be really bullish with DXY. So that's actually what I'm wanting to see. So I want to see like DXY be like pretty bearish right now, because we want to see a lot of displacement to the upside on NQ and ES. So DXY has got to be pretty bearish, and then we gotta tap into like a pretty big PD array or sweep a lot of sell side liquidity, and then be pretty bullish on DXY. So we'll do our analysis and let's see if that really comes in line with like what I'm expecting. Still have this marked out. This is like for my previous analysis. So we had buy side liquidity here. We had actually this SIBI here. Then we had this sell side liquidity, which is low resistance liquidity. Reacted off that rejection block, constant encroachment, and we created equal lows like a low resistance liquidity here. So we're tapping into that SIBI, so it does kind of match with what I'm expecting with NQ and ES. So gotta see a lot of bearish displacement for ES and NQ to really grow. But we gotta remember that we're on the monthly right now. So that means if we react off this BPR, and then what I'm expecting is like we turtle soup this, react off this BPR, we're gonna be pretty bearish. We're gonna sweep this sell side liquidity, and then we have a busy here, and then actually what I want to see is like a lot of bullish displacement. We're running monthly, so it's actually gonna we're maybe gonna be like really bullish on NQ and ES, because this is like a whole month. It could be like 1 month of like all bullishness on or all bullish prices on ES and NQ, and then ES just gonna dump in 1 month and take out these lows. That could happen. Am I expecting that? Maybe, I don't know. It could be like in 2 months we could make like more all-time highs on NQ and ES. Like if we look at like previous data, then this is like the only real retracement that we actually got. So I don't know how bullish we really are gonna be. We did get like a retracement in 2018, so we got a retracement after that, and we got like we were making from 2018 we're making all these new highs. So we have been like in like new highs from like 2018 where we're like at this low. We got another retracement here, so let's say like 2020 all the way to like a whole year of like new territory. So don't know for sure if you just want to sweep that low and then sweep that high and just go lower. So we could actually be pretty bullish on NQ, and we could be in like bullish prices for like months. I don't even know, but it could be. No one really knows because we're like in new territory where you've been trading in like, I don't even know, futures in like 2008 when the crash happened. So that could be a thing, but yeah, don't know really what we want to do here. But of course we want to manipulate somewhat to the upside, like faking people here. Or like, it doesn't have to be actually that we fake people, because there could be like buy stops here that could happen, but we could just be pretty bullish. We could just like, we actually like pretty bullish here, and then fake traders out there, maybe they think we're going to like the moon or something, and then they hold for too long, and then we're wanting this place to the downside. But we could be pretty bullish for like a couple of months. I don't even know, but we'll see what happens. So let's match that with DXY. So DXY could be like, let's say we take out this sell side liquidity for like 3 months, then we would be bullish on NQ and ES for like 3 months. And then after that, we want to see like a big bullish price on DXY and big bearish prices on NQ and ES, or like the indices. So let's see if we match that. So here, this would match it already. What my analysis was saying. So we will be pretty bearish here. So turtle soup this, then we would be pretty bearish. We take out the sell side liquidity, then we tap into this busy, and then we will be going higher. So that's basically what comes in line with like the indices. But let's actually see if that does make like sense with what we actually have on DXY. So let's actually do our whole analysis starting from the 12 month. So 12 months DXY are kind of like in a consolidation range. Just 1984. Let's just treat this as like this is a 15-minute chart or something. So we swept the sell side liquidity here, felt it displays higher. We do have a order block here that we failed to reach. So where did we go? We filled up this entire SIBI. Also this, we can go higher than the 12 months, so that's really where we're stuck right now. So we gotta look more inside of this leg, but this is actually an order block, or like on the bigger time frame it would be like a bigger order block, or like small order block, I don't even know. But we have to even higher here. Again, swept this low. Let's actually see if you have like this, if you have like a standard deviation here. So you have an internal low here, you have a or like a long-term high here, sorry. Internal, actually it isn't, it is actually internal high, short-term high, short-term high. So we have two next to each other, so these are actually equal highs basically. So a lot of buy stops above there, so mark that out as buy side liquidity already. If you look at this price leg, then this is actually an order block, this here. We did tap this order block perfectly. Look at the mean threshold of this wick here. So react off there, but we swept the sell side liquidity here. So we swept sell side here. We had displacement higher. Kind of create like equal lows here as well. So kind of like in both ranges. Like we have equal highs here and equal lows here, but it's actually bear time frame equal lows. We do have this breaker here, A to B leg. You have a low, high, lower low. We have a higher high. So this is actually breaker. Look at the breaker holding here as well. Here on these two candles actually created what is it? Like equal lows there as well. But we have a unicorn setup here. We can't go higher than the 12 months, so we can't make this a singular four-way gap or singular busy. But I'll just mark out this this busy here. So we could say that this is like kind of balanced before we go any lower. So this is balanced for now. We want to take out the buy side liquidity. So this is actually my drawn liquidity. Still, if you get like a standard deviation on here, let's see what matches. -2, -2.5 standard deviation comes in line with like this buy side liquidity. -1 standard deviation doesn't really come in line with anything. Didn't tap it on these candles. Let's see at the B2C leg. Damn, that's crazy. So B2C leg, rejection block, constant encroachment, or the mean threshold of the order block. Perfectly in line with the mean threshold. We tapped it there. We had displacement lower, but -2, -2.5 standard deviation. That's our draw on liquidity really, because we want to take out buy side liquidity. We don't want to be retail traders, and we don't want to look at the idea of support and resistance. So rejection blocks are actually like support and resistance, like PD ratio, you could say. So we want to see a small reaction, small manipulation reaction to the downside, and then we want to displace to these highs. So -2, -2.5, we could mark this out. We have like this 12-month order block. It could be like, I don't know, like a 2-year order block or something. That would be more accurate, but mean threshold of this order block comes in line with its -2, -2.5 standard deviation. And I'll just leave this on here. So you've got a reaction of this mean threshold of this order block. We're actually displacing lower. Where could we go after reacting of that mean threshold? First we have another rejection block here, or we have a rejection block here. So we reacted off this. So the candle opened here. We had our manipulation to the downside. Then we displaced all the way higher. Tapped that mean threshold, closed lower, open here, manipulation to the upside actually, then went lower, then closed here. So what we could do here is we go higher, and then we want to go lower, and then we want to balance, because we're basically could see it as external, internal. So we failed to reach higher, we failed to reach external, and now we go internal to get more liquidity, to get more people out of the market. So smart money could buy because they need liquidity. Where's liquidity? At these sell stops, at this low. So sell stops are here. So this is actually my draw on liquidity, because what I want to see is actually basically what we have is fail to reach. We go lower. We're accumulating orders. We need liquidity. We get the liquidity. We take all those people out. Smart money buys here, a lot of buying here for smart money. Then we go all the way up, rejecting off that rejection block on encroachment. Have like a small display to the downside, more liquidity created. We're accumulating more. People are thinking, yeah, we're still bearish because we have this support and resistance idea. Then we displace higher, taking out those buy stops, triggering people into the market, creating like a breaker. Trapping those people, and then go higher, take out buy side liquidity, go even higher, -2, -2.5 standard deviation, react to that mean threshold order block, and then from there, I don't know. But yeah, what we're just anticipating is we have this direction here, and we want to go to this BISI here. So that's basically our draw on liquidity. So now we're gonna look on time frames how we're gonna get there. So let's see what we do. Let's go to the monthly, make it clean. So we felt to displace lower, we're accumulating orders, we have this accumulation. We go make this a singular four-way gap. So we have two BISIs there. So in this price leg I want to see a singular four-way gap, singular SIBI. Here. We're accumulating orders inside of here, just like in this range. You have the accumulation to the upside, we're expecting distribution to the downside. Just reacting off this reduction block, thinking retail traders are thinking, yeah, we have this resistance because there's stops are beneath here. Maybe they went long inside of this breakout here. Stops are beneath that low because there's resistance. And then from here, we want to go again from external to internal, and from internal, you want to go back to external, sweeping these equal lows. Where equal lows is low resistance liquidity. Here. So here, and then we have a singular SIBI here. So we have a SIBI here, so smart money sold above these highs. above this high, which actually like comes in line with like this PD array with this SIBI. So we have liquidity above here, so smart money goes above here, sells above this high, selling the buy stops, reacting off this SIBI, going lower, still in profit, reacting off this internal. They will be selling here again, and then from here will be lower resistance liquidity. We will get like another breaker. We won't go lower than the daily because you don't need to, or like you could go as low as the 12-hour, I would say. But basically from there it's just all noise really, because you want to frame your bias on the daily, or like the 12-hour daily and above, because the rest is just noise and it's just accumulating. If you frame your bias of like a 4-hour, then that will probably be like accumulation. Like let's say if you have like a 4-hour break here, you'd say yeah, we're bearish after that, but that's just on the daily, it's just more accumulation. So even on the 12-hour, more accumulation. So I don't really personally don't go lower than the 12-hour. But we have this SIB here, so we sweep this equal highs actually on inside of this SIBI right there, tapping into the BPR as well, which I had marked out on my previous one. Yeah, so we had this BPR here, so it's actually like a brick wall. We won't go through there. Could mark that out here like a where is it? Balance price range. So we actually have a BPR overlapping with this, and then from here we want to see like a breaker. So where could this breaker form? Let's look at like the 12-hour. Actually close perfectly here to the tick on this 12-hour. Basically what I want to see is actually this is low resistance liquidity, these lows. So could mark this as equal highs. Again, support and resistance, like there's resistance here. There are going to be buy stops above here. Smart money is going to sell above there. So we could mark this out as like, let's say we anticipate this as to be our breaker. So this is going to be the A to B leg. Let's say this is like our B to C leg. Let's say this is like our B to C leg. Then -2, -3.5 standard deviation comes along with like this low. Maybe go even higher, but I'm not really expecting that because we have this BPR. But we could wick. We could just like barely tap inside of this SIBI. And then we could just step inside of this. Here -1 standard deviation comes perfectly in line with like that low. Like here. Doesn't really gonna mean that we will go all the way there. But really what I'm expecting is here. So A, B, C, D, retracement, lower. This is basically what I'm like anticipating. Equal lows here as well. This is really what I'm anticipating. And this is really gonna be a turtle soup probably. Because I don't really expect us to go all the way above here. Even though this is like a market maker buy model. You have like original consolidation, you have like accumulation 1, accumulation 2, accumulation 3, smart money reversal. But as you can see, we're actually in a, or not yet, but we're creating like a market maker style model. We're setting up for like a market maker style model. You have accumulation 1. This is like, or you could see this is like our original consolidation. Or like even this could be our original consolidation. Accumulation 1, accumulation 2, smart money reversal, and then just take out all these lows because it's low resistance liquidity. But this is like textbook. It looks like so clean. Maybe you could see it on like, I don't even know, like daily or something. But just looks too clean. Like this low here, accumulation 1, push, accumulation 2, push. That's just looking too clean. But that's really what I'm expecting. So our draw on liquidity. It's actually this here, this sell side liquidity. and then just barely just step inside of that busy. So there. So that's really what I'm anticipating. And then after that, we're probably gonna be bullish. So what does this look like for ES and NQ? Well, we already said that, I explained that, but bullish prices. So maybe like a small retracement, like NQ and ES. Then we will be really bearish, and then we will be really bullish on NQ and ES. So what I was saying, like we could create like all-time highs and could be in that for like months. So yeah, that could be a thing. And then we would be pretty bearish, and that could take like, if we look at here, because we have this SIBI and this PPR here. Let's say this is gonna be like one singular candle that's going all the way to this draw on liquidity. I'm not expecting that, but if we look at like previous candles, like I'm not really expecting that. So if you look at like this candle here, let's say it's a pretty big candle, right? Alright, alright, can I maybe take it? Alright. Let's say this is actually a pretty big candle, but I'm not really expecting this candle to be doubled. So don't expect that. So I would say like at least 2 months, maybe 3 months for us to be at this strong liquidity. So 2 months minimal, I would say, for us to be at this strong liquidity. So what does that mean? Like roughly we will be 2 months of bullish prices on NQ and ES. If you compare it like DXY, because they kind of move, or they move relatively in tandem, I would say. Forex does better though, but they move in tandem as well. But we could be pretty bullish for like 2 months, at least 2-3 months. And then after that we would be pretty bearish on NQ and ES. And if you would look at like this chart here on NQ, for example, you could do this on ES as well, but for like minimal 2 months, I would say, right? We will be pretty bullish. Let's just grab from this entire bullish leg, right? Let's just grab like a random candle, like a average candle here, or like let's even pick this candle, right? It's a pretty average candle, or looks like an average candle. It's gonna message on Discord. Don't know what that was, but all right. So let's say it's like this candle, right? This one candle, 2 candles, 3 candles. So we could be like pretty high actually. So 3 months, 2 to 3 months, we're actually pretty bullish, and then after that we could be really bearish, and then really bullish on DXY. So if we look at like a bigger time frame, we could retrace in this busy, go really bullish, and that's kind of what I'm expecting, because we're already active of this unicorn, even though we created equal lows here. But we could be really bullish on DXY, and then we could go for this buy side liquidity, and that would be like, this would be on the 12 months. So we could be really bearish on NQ and ES. Also not really expecting that, but just gotta wait for what we have to see. But just already enough for like the 2 months. For the upcoming 2 months, I'm gonna probably pretty bullish, because on DXY I'm pretty bearish, so makes sense, right? So that's kind of it really. Or we could be in like a really big consolidation above, or like at these all-time highs, so like somewhere here. But we're creating like this market maker sell model, I would say. So yeah, we'll see what happens with that. And then also for previous week, how the trading went. So I'm trading on this new account, which is a 1 million paper trade account, and then I'm risking like 0.25% with like setups that were pretty good to me, or pretty bad to me. And then I was trading on only the news days, so I'm actually taking really like pretty disciplined trades, I would say. So only trading on news days, only trading with good bias, only trading with time. So that's really it. So win rate is actually pretty good, but then my risk management wasn't really a point. So actually pretty good risk to reward, or pretty good win rate, but I took like pretty big losses. Even though you could see this, I'm treating this as like a top step 100k account, but then I could just trade the minis with like bigger contracts. So I also get used to like the bigger number when, in my P&L, and I'm only down 0.8%. So max target loss is 3%, only down 0.8%, and took this pretty big losses, I would say. But I just need like a few good trades, and then I'll be back. It could be like so easy. It's just all in my head. I'm just gonna wait for the right setup, right time, and that's just basically all it. So don't really care about the minus 0.8% drawdown. It's fine. I know I just could make it back in like a good trade, and that's just what I'm waiting for. I'm like done with taking like the bad setups and stuff. It's just it's so dumb. I don't even know. It's so dumb. It's so dumb. But yeah, 0.8% down right now. Target is 6%. Now it's 6.8%, but we'll just need like a 1 to 2 or a good trade with like good risk management, and we'll be up already pretty good. Just need the good trades with the good time, good risk management, right entry, right bias. Just it's all so easy, but it's just all in my head. Yeah, it's just all in my head. That's really it. Like there's nothing on technical analysis that I need to learn. It's just all about time, the right risk management, the right mindset at that time, and that's just it. And I made notes as well, so I'm just every 1 to 1, I'm taking 20 trades. I'm journaling all those 20 trades, and then after that I'm gonna do all those upcoming 20 trades after that again, and then journaling that again until I think I don't need it anymore. But that probably will be like a long time. I really like I thought that with journaling was actually pretty stupid, or like not stupid, but didn't really think I would need it. Like I thought that I'm good without the journal. I'm good without it. I will be different, you know. But actually journaled, and I really like the journal. It's actually really nice to type in. Just spend more time learning actually, and I'm actually learning from this. So I really like journaling now. So it's actually really fun to make. But this is like, you could take this here. Maybe later on, like a lot of people are watching, I could leave this as like a template. This is all you need. It's actually pretty a lot actually, but this is actually all I want to see. So first trade, actually you win. So you get like your risk reward. How much was the risk reward? How much did you get out of it? What was your reason for the trade? Like ticker is ES, profit is 1.27%. Time frame entry, that's interesting. What date are you trading on? What was the price action? It was clean. Did you add news? High impact news folder. 8:30 unemployment claims. Time of entry. London session. Liquidity taken. Asian high. Drawn liquidity. Recent trade. Result. What did I do bad? What did I do good for next time? That's like everything you need, right? And then thoughts. Well, I'm in a trade. This is like all you need, right? So I could, let's say, like my thoughts was like, I was actually pretty bearish, but we're actually pretty bullish on while we're taking a trade, or while we were in. So my bias wasn't correct, or we were just creating more sell side liquidity. So right here, My target was actually this sell side liquidity, but I actually never took the sell side liquidity, and even now we never took this, not even on ES or anything else. So we actually have equal lows here. So what does that mean? So we're actually creating this we're actually creating this really big market maker sell model. And what is this going to be? This is actually going to be our original consolidation. So it's a really big consolidation, but that will be like a really big market maker sell model. So I have that marked out. That's like your first one. Then the second one, like simple colors, just shows what this means, like trajectory, ticker, and Q, and same thing. Dots all in, and it's that simple. But that's basically it. And then for upcoming week, I'll be trading if I see like a good setup, if time aligns, if everything aligns. Then trading days are again Tuesday, or like Monday accumulation, Tuesday trading day, Wednesday accumulation, no trading day. Thursday we have a lot of high impact news folders, so after 8:30 you're good to trade. Friday a lot of high impact news folders as well, and then after 8:30 you're good to trade. Don't hold for too long. I would say don't go in a trade at 9:45, or like don't trade at all at 9:30 and wait after 10. Maybe get like really good setup in pre-market, but I wouldn't bet on it. But yeah, these days are trading days, and then don't touch these days, please. I'm never touching accumulation days again. It's just that easy. It's just all in your head. It's that easy. But yeah, that's just it, and I'll see you guys on maybe Thursday or Tuesday. So CPI then. So pretty big news folder, a lot of volatility, but we'll see. So yeah, all right. So bye.